This is the Asia Trade. I'm Haidi Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. A heavy police presence in Seoul as South Korean investigators move to arrest impeached President Yoon at his residence in the capital. Asian stocks are to open under pressure after Wall Street starts the new year with a fifth straight session of declines. A key volatility index climbing after a series of violent attacks in the US. And Tesla shares tumble the most in more than 2 years as annual sales decline for the first time in over a decade. Let's get you straight to the markets as we get into this staggered open here in Australia. And of course, it has been a pretty weak start to global equity risk sentiment, certainly. And we took a little bit of a look at just how much that volatility, the key volatility gauge, has been climbing, particularly when it comes to the US. Not a whole lot of positivity to be handing over to Asia this session on Friday. They are primed to open lower when it comes to Asian equities. US stocks falling for that fifth straight session, really underscoring what is a pretty cautious start to the year on Wall Street, despite a stellar outperformance in the previous year. We are seeing not much change when it comes to the start of trading here in Sydney. There are some of the stocks that we're sort of watching at the moment, particularly when it comes to some of the companies trading ex-dividend today, as well as some of the miners, as well as the sort of the China-related stock, to see whether we see much of a reaction to some of the latest data out of China, as well as sort of expectations of further stimulus. We did see Aussie stocks rising in the first day of trading with that leadership from the commodities and mining space there. Dollar yen holding pretty steady at the 157.48 level. Not too much of that haven demand, despite really a lot of uncertainties that we see from around the world at the moment, not least of which is sort of some of the geopolitical plays there as we head into the start of the Trump administration in just a few weeks' time. But taking a look also at how we're setting up when it comes to US futures, given what was a pretty lackluster session. We had the S&P 500, the Nasdaq 100 both falling about 0.25%. A lot of that weight sort of coming down from lackluster numbers out of Tesla, the miss on estimates for the fourth quarter and on annual sales dropping for the first time in over 10 years. That worst 5-day drop in Tesla stocks in more than 2 years is down almost 20% since that Christmas period. And we are looking at a pretty sluggish sort of start to the session across assets, including crude, where we're seeing not much of a change there as that remains range bound, really. And of course, politics at play in this part of the world as well, with South Korea's Yonhap news saying that investigators have arrived at the residence of the impeached president, Yoon as they try to execute an arrest warrant against him. That warrant was issued this week after Yoon repeatedly refused to appear for questioning over his short-lived martial law declaration. Our chief North Asia correspondent, Stephen Angle, joins us now. And Steve, this would be, extraordinary images, extraordinary in terms of this development. What are we expecting?
Well, it seems as though that this crisis that has really erupted in South Korea now for a month. In fact, it was a month ago today that Yoon Suk-yeol, the president, issued that ill-fated declaration of martial law, which triggered this crisis in South Korea. But again, he's refused 3 different times to meet with investigators, of course, after the arrest warrant was issued by the Seoul Western District Court on Tuesday. And now it has come to a head outside his residence in central Seoul, where about 3,000 police officers have joined with investigators from the Corruption Investigation Office for high-ranking officials, which are now said to be acting on that arrest warrant. Keep in mind, they have just 7 days until that, from the issuance of the warrant until it expires. So that would be at the end of Monday. So today and through this weekend, things could come to a boil and to a head, obviously. We have not gotten any reports yet whether the team of investigators have teamed up with the police to try and essentially break their way through hundreds of Yoon supporters who have rallied outside of the presidential residence, as Yoon is said to be inside and staying there and refusing to cooperate. In fact, his legal team yesterday issued or made a petition in court as well to essentially say that any move to get the police and the anti-corruption investigators together would be an illegal move. In fact, this arrest warrant and the proceedings so far, the Yoon team has called illegal and invalid. So there's a standoff essentially right now, and we're going to have to see how this obviously plays out. It might not happen today. It could potentially happen over the weekend, but something will happen by Monday, obviously, when the arrest warrant potentially expires. And again, this investigation, the anti-corruption investigation team, if they do in fact arrest him, they would have then 48 hours to decide whether to formally arrest the president or release him. So lots yet to be determined.
And Steve, in fact, in just the last couple of minutes, we're hearing more Yonhap reporting saying that investigators in Korea have now entered Yoon's residence. So there has been indication from him that he would stay and fight it out in court. Do we know what sort of time frame, what happens from here? And, you know, this is a country that's engulfed in sort of so many different types of crises at the moment. Do we expect any sort of stability anytime to come?
Well, we obviously have to hear the results from the Constitutional Court. So following that impeachment on December 14th, the ball was then handed on to the Constitutional Court and they've begun, we're hearing, deliberations on the move to potentially remove President Yoon. So the Constitutional Court would, either have to rule by, I don't know the exact date, but on whether to uphold the impeachment and then go ahead for the proceedings to potentially remove the president. So there are still a number of procedural steps to go. But right now, the anti-corruption investigation force is acting on that Seoul Western District Court arrest warrant that was issued Tuesday. So that will come to a head. I believe President Yoon is probably trying to hold out as long as possible for the warrant to expire on Monday and then move to the next step. So there's a procedure going on here. Whether, of course, the anti-corruption investigation officers and the police can, as you said, they've entered the house, whether they can formally arrest him and take him into custody and begin that process is something that is going to be playing out over the next few hours.
And in fact, Steve, this is sort of playing out over the next few minutes, it seems. Investigators in South Korea, having entered Yoon's residence, have now attempted to arrest Yoon. They've begun exercising their arrest warrant. This is according to the latest in Yonhap. And obviously, this is moving very quickly. We've also seen, of course, a number of other aspects of this crisis, and the fact that, the opposition as well as the leadership that remains in place hasn't been in place for very long. They're now dealing with, of course, not just this constitutional crisis and the governance crisis, but also trying to manage the country through the aftermath and the mourning period after the Jeju Airlines disaster as well. We've also seen South Korea cutting their growth forecast after this martial law fiasco. How big are the challenges for, whoever the next government and leader is going to be?
The storm in South Korea right now, given the constitutional and presidential crisis and that air crash and a period of mourning in South Korea, it's just absolutely mind-boggling to think how and what the next steps of recovery of confidence will take as this constitutional crisis potentially can go for the next month or two as the Constitutional Court reviews the whole process. But, any next administration, if we want to even jump ahead and speculate on that, would obviously first task would be to restore that confidence and restore order in the presidential office.
Our Chief North Asia correspondent Stephen Angle will bring you the latest as the details get to us. But the very latest that we have is that South Korean investigators have begun exercising their arrest warrant for Yoon and have entered Yoon's residence to attempt to arrest him, according to breaking news reporting from Yonhap there. Let's get some markets perspective now with Jason Schenker, who's the president and chief economist at Prestige Economics, who's joining us out of Tokyo. Jason, great to have you with us. And, we start off the year, as we were talking about in the commercial break earlier, there is so much going on, be it, of course, a lot of these events happening in the US, a lot of the uncertainty going into the Trump presidency, and crises in parts of Asia as well, right? How do you sort of navigate that uncertainty, even just on the first couple of days of 2025?
Yeah, these are great questions, Heidi. I think the most important thing right now to consider is there's solid economic tailwinds for the United States and for the global economy. We're in an environment where interest rates are poised to move lower. That's all very positive, but the biggest risks looming both going into 2024 and now going into 2025 are geopolitical and political risks. So I think we have to acknowledge those risks, but also look at the realities of a series of central bank policies that are likely to result in lower interest rates in the year ahead, more positive growth opportunities, and even though we see trade restrictions and tariffs as posing risks, there are going to be opportunities for winners in those environments as we see a further decoupling of dual use and technology supply chains from the U.S. and its allies, decoupling that from China.
So when you take a look at the risks for Korea, we've gone through just some of the immediate challenges, and a lot of the hope for a market like Korea is that, you know, in the medium term, perhaps you can kind of replicate the success that we've seen for Japan. Does this make the outlook a little bit murkier?
Well, I think there are two pieces as we're looking at the Korean outlook, right? There's the near term with the political risks, something that could further weigh on the Korean won, something that could impact how the Bank of Korea thinks about interest rate moves in the year ahead, and what even the growth outlook is in the near term. But in the longer run, the ICT industries in Korea are an important pillar of how the U.S. and its allies are planning to resist and decouple technology supply chains from China. So there are a lot of opportunities there for Korea. I'm very optimistic about the South Korean economy. And of course, look, I'm based in Austin, Texas, where we see Samsung expanding their chip manufacturing facilities. Again, you can see, I see it on the ground as Korea is becoming an ever more important part of that technology supply chain and decoupling from China. I think Korea is poised to be a big winner for that.
And of course, you've spent a fair bit of time in Japan this year, including your most recent stint. How's that sort of informed your view of that market and where you could see the opportunities this year?
Yeah, I think there are a lot of opportunities for Japan. I think obviously right now the very weak Japanese yen has been very positive for Japanese exports. And by the way, all these conflicts and challenges in Korea, weak Korean won is also positive for a country that's exporting high-value ICT products. That weak Japanese yen, very positive for Japanese manufacturers, very positive for Japanese ICT exports, also very positive for Japanese tourism. But in the year ahead, the Bank of Japan is looking to raise interest rates, however modestly, while the Fed is likely to cut interest rates. Our base case scenario is 3 interest rate cuts this year. That means that the Japanese yen is likely to strengthen a little bit against the dollar because those central bank policies are likely to move in opposite directions. But the Japanese yen is likely to remain relatively weak, which is something that should continue to be supportive of growth, especially with an exports focus for those high value capital goods, manufactured goods, and ICT technology products.
And of course, when we talk about sort of the Asia tech complex, we've got to look at the likes of Taiwan and Greater China there as well, right? Do you kind of expect to see that bifurcation? Where do the opportunities look compelling for you in that space?
Well, I think this is the big question mark here is how long does it take before a kinetic conflict between China and Taiwan becomes imminent? And I think this is the risk that a lot of countries and corporate executives, institutional investors, they're trying to balance. When does the saber rattling potentially turn into something like a more permanent blockade, which is we saw those joint sword operations 2024A in May of 2024 and joint sword 2024B in October of 2024. When does that that kind of situation where Taiwan gets surrounded by China's Navy, the biggest Navy in the world, when does that become a greater risk that they surround Taiwan and stay for a protracted period? This is the big risk that everyone's trying to balance. In the near term, of course, there are opportunities for Taiwan, critical economy for the global supply chain, for technology products, for chips and the like. But what happens if we end up with a kinetic conflict? That's the big risk. This is why there are such big opportunities for Korea and Japan in the years ahead, as that risk becomes a greater probability event going forward.
Jason Schenker is the president and chief economist at Prestige Economics. Do stay with us. Lots more to talk about, including, of course, the outlook for the Fed. But in the meantime, we're still monitoring the latest developments out of Korea, as well as we continue to see really the latest in terms of this constitutional crisis and the governance crisis that we're witnessing play out. The investigators there have moved to arrest President Yoon. They've begun exercising the arrest warrant for President Yoon, according to Yonhap. That's the latest. That investigators have attempted to arrest him after entering his residence. So the Corruption Investigation Office for high-ranking officials began executing that arrest warrant earlier today, just in fact over the last sort of 10 minutes or so, having departed the government complex in 5 vehicles early on Friday morning to Yoon's residence to execute that arrest warrant. And they have headed to the presidential residence where President Yoon is staying. There was some sort of confusion as to whether investigators would be meeting with the police first, but they do expect to execute that warrant with the support of the police, which is forming a joint probe team. And we see really the crowd gathering there, including, of course, some of his supporters. We have seen that Korean court issue that arrest warrant for President Yoon over the past days over the insurrection allegations related to that short-lived martial law declaration. This really after Yoon repeatedly refused to appear for questioning. If this is successfully executed, he will be the first sitting president in South Korean history to be arrested. We'll keep you up to date with the latest as we get those details. More ahead on the Asia trade. This is Bloomberg. A lot of nervousness to kick off this new year when it comes to US equities, and that sort of really pass through some of that malaise through to Asia as well. We are seeing US futures, S&P as well as Nasdaq 100 futures in the green at the moment, but really just barely. That read across the sell-off really driven by losses in Tesla as well as Apple in the overnight session, really suggesting that this negative start to the year will prevail. Particularly a lot of anxiety building around Chinese equities as well, which started the year pretty badly. It stayed pretty weak through that ADR session overnight as well. And even looking at treasuries, the early bid fading away, yields are flipping to a little bit cheaper on the day there as well. So pretty early rally, but very limited catalyst when it comes to treasuries, particularly when it comes to some of those delayed month-end flows, given limited trading activity still at this time of year. Let's get some more perspective now. Jason Schenker is still with us, president and chief economist at Prestige Economics, who's with us out of Tokyo today. So, Jason, you say that some pretty significant shifts in expectations on the Fed and monetary policy could happen over the next 3 to 4 months. Is that with or without the impact of whatever we see from the trade and immigration and fiscal policies of a Trump administration?
Yeah, so this excludes what we might see with the tariff and trade and immigration policy expectations. Just looking at what is likely to happen with things like the CPI data alone could drastically shift Fed expectations over the next 3 to 4 months. Basically, if you look at the historical data and where we're likely to see CPI come in for the next few months, base effects could send CPI for December, which will be out on January 15th, up higher on the year-on-year rate. In other words, we'll go probably from 2.7% up to 2.9, maybe even 3%. That's definitely the wrong direction that people are going to want to see, right? An acceleration in that headline CPI. Core CPI could accelerate from 3.3 to 3.4, also moving in the wrong direction. And then the result would be that you have a pricing in of fewer rate cuts than we already see. We saw those drastically reduced in the December FOMC projections, where an expectation of 4 rate cuts was reduced to 2. We could see markets price in maybe only 1 rate cut following that CPI report. That could strengthen the dollar, weigh on equities, weigh on bond prices, send yields higher. So you could have a number of different things happen. And as a result, what we could also see is the CPI come in a little bit weaker going forward, though, in the second quarter, where we think the headline CPI number could be below 2%, maybe even flirting towards 1.5%. The result of that would be the opposite impact, where suddenly people are pricing in multiple Fed rate cuts. We go from expectations of maybe 1 or 2 back to 3 or more, and suddenly the dollar weakens, equities rise, bond prices rise, bond yields fall. So you could see this swing in the markets where you could get over the next 4 months, that little kid soccer team of expectations runs to, oh no, the Fed won't be able to cut rates, to, oh no, they need to cut rates a bunch. And that's something that could happen in just the next 4 months, excluding what we might see from policy expectations.
What does that mean for broader commodities? For gold, for example, we're still seeing that continue to advance even after, what, a 27% annual gain last year?
Yeah, I think for gold prices, obviously, if we get a stronger greenback on a CPI number that's going to be a little bit higher than expected, we could see gold prices come under a bit of pressure. But if in Q2, by the time we hit those March, April CPI reports, if we're between 1.5% and 2%, gold prices could rise on expectations of more Fed rate cuts. For industrial metals prices, they're going to behave probably a bit more like what we'd see from equities and from bonds, where if we get that stronger greenback on more inflation in Jan, then you're going to get, with that release on Jan 15th, the December numbers, you're going to probably see ferrous and non-ferrous metals maybe come under pressure here at the beginning of the year. But in Q2 and beyond, there's more upside. And there are expectations, as we see interest rate cuts across the global economy, that industrial metals prices could end the year significantly higher than they are now, because global manufacturing is likely to see upside.
What are your assumptions on the US dollar then?
Yeah, the assumption that we have going into this year is we're going to end the year weaker than we started the year. It'll probably still be relatively strong against most currencies, but because the Fed is likely to cut rates, and we expect 3 rate cuts this year because of these swings in inflation, whereas right now most are pricing in 2, mirroring the Fed's December FOMC projections, we get more cuts than people are expecting. If they're expecting 2 and we get 3, we get a weaker greenback by year end than we started the year. That's something that will reverberate across economies and be more supportive for things like the Japanese yen and even the Korean won, especially once we get past these political tensions that we see right now. There's more upside for those currencies by year end.
Jason, always great to have you with us. Jason Schenker, who's a president and chief economist at Prestige Economics. And of course, we continue to be monitoring the latest out of South Korea as you take a look at what's going on in Seoul. And we are awaiting a further update as investigators are executing that arrest warrant for President Yoon. This is Bloomberg. We do have latest developments in South Korea as anti-corruption investigators there move to arrest the impeached president Yoon Suk-yeol. Early on Friday morning, protesters gathering outside his residence to try and block the attempt. We had that team from the Corruption Investigation Office for high-ranking officials arriving at the residence in Seoul's Yongsan district to carry out the arrest. And we're hearing really some of the latest when it comes to their attempt to exercise the arrest warrant. We'll be watching for those further developments as they come to us. This is Bloomberg. Well, Tesla shares fell after annual vehicle sales dropped for the first time in over a decade. That was despite a year-end push that delivered a record fourth quarter. Bloomberg's Global Business Asia editor Peter Verco joins us now for more. So is the outlook now looking a bit murky for Tesla this year?
Yeah, good morning, Heidi. It certainly is. We saw that Tesla sales fell for the first time in more than a decade last year. It sold 1.79 million vehicles overall. And, you know, we have seen, industry-wide that there's sluggish demand for EVs. In their last earnings call, Elon Musk forecast or guided for 20 to 30% sales growth in 2025. But, that is now looking pretty optimistic, to say the least. That relies in part on a more affordable car that Tesla has yet to unveil, and advances in autonomous driving technology that no one has fully mastered yet, and that Musk has consistently overpromised and underdelivered on that.
The Cybertruck has obviously been making headlines for the wrong reasons in the US this week, but there's also some changes when it comes to tax credit qualification. Is this good news, in particular for this model?
Well, partly. So the Cybertruck now qualifies for the $7,500 tax credit under Joe Biden's IRA for the first time. But given that the Cybertruck ranges in price from $60,000 to $100,000, it's not sort of the market that a tax credit is really going to increase sales for. And the Cybertruck, given its look and everything like that, is a very particular car that appeals to a very particular buyer. And while Tesla doesn't break out sales by model in particular, we did see that sales of its premium models, which include the S and the X, rose only 3% in the fourth quarter from a year ago. And that could suggest that the Cybertruck, instead of adding to sales, is just really cannibalizing sales of those other premium models at the top end for Tesla.
And it comes at a time when BYD is closing that gap as well, right, with Tesla. We also have seen most of the annual sales numbers for the Chinese automakers. What's sort of your gauge on what the outlook this year is going to look like for those?
Yeah, really interesting from China. We saw BYD sold a record 4.27 million cars in 2024, and that was up from just over 3 million in 2023. So still, really rapid growth there at BYD. Li Auto sold more than 500,000. Li Motors doubled its sales to almost 300,000. But then some of the smaller players like NIO and XPeng and Zeekr missed their sales target. I think what that is going to tell us, or what that tells us, is that we're in for another year of relentless competition in China. It is a fiercely competitive market. We're going to see the trade tariffs that the European Union has imposed really take their full effect this year. They only came in to place late last year. And that's going to increase the importance of that domestic market for Chinese makers more than ever, because their prospects for growth overseas are now less. The Chinese Passenger Car Association has forecast 2% sales growth this year, which is down from 5.7% last year. So I think that also means that we could see smaller manufacturers struggle to survive, especially given the rise of the new entrants like the tech giants Xiaomi and Huawei. And I think one thing that means for certain is we're going to see a lot more innovation, particularly on the tech front, in Chinese automakers this year.
Bloomberg's Global Business Asia editor Peter Verco there with the outlook for Chinese automakers and Tesla going into this new year. We do have some further breaking developments when it comes to the situation in South Korea, with anti-corruption investigators moving to arrest impeached President Yoon today. President Yoon's lawyer saying that the arrest warrant is illegal and invalid, that they will take legal action against the arrest attempt. This is not perhaps new, because his representative has consistently called the arrest warrant illegal and invalid and had been seeking a court injunction. You can see the live pictures there just outside of his residence in Seoul, as we saw the deployment of some 2,700 officers near his residence, according to Yonhap. Some of Yoon's supporters gathering to attempt to block this truly unprecedented attempt to arrest a sitting president. If if this is successful, and we're still sort of gathering details as to where they're at in that process, it would be the first time in South Korean history. Earlier, we had seen that Korean investigators had entered his residence and were attempting to exercise the arrest warrant against President Yoon, of course, whose December 3rd martial law declaration plunged South Korea into the worst constitutional crisis in decades. A lot of pressure on financial markets, on the won, the disruption of diplomatic efforts, and ultimately leading to that impeachment on December 14th. We continue to watch this very, very closely. In the meantime, though, back to China, and Beijing is planning to tighten export restrictions on certain technology used to make battery components and the processing of two crucial metals amid rising trade tensions. Our China correspondent Min Min Lo joins us now from Hong Kong. So, Min Min, tell us about these latest moves and how extensive they are.
Yeah, so the Chinese Ministry of Commerce is mulling restricting the sale of battery cathode material preparation technology, as well as some of the technologies and processes used to extract things like lithium and gallium. And this is not finalized yet. The Ministry of Commerce is opening up for public comments until the end of the month. But this comes about a month after China had announced it will be banning the shipments of several critical minerals to the U.S. in a tit-for-tat retaliation after Biden administration had announced the expansion of tech curbs, the export of these advanced chip technology to China. So you can see on the screen that it is still possible to get other sources of these critical materials, but China is by far the largest supplier of many of these critical materials, which means that if China imposes a ban, it could jack up those prices. And for now, we know that antimony, gallium, germanium, super hard materials have already been banned. Graphite is also under tighter restrictions. We have seen those prices of some of these metals going up over the past year. Washington has expressed a concern over their supply chain resilience and has previously said that they will be mulling mitigation measures.
We've also seen that reaction when it comes to metals markets, right? Nickel hitting that 4-year low. We saw weakness in copper and, of course, a terrible year for iron ore broadly as well. Does this kind of tell us that certainly metals markets are a bit concerned about China's ability to stage a recovery?
Yeah, it is very tied to the Chinese recovery story, given that China is the biggest consumer of many of these metals. And if you look at nickel, it is it's trading at its lowest levels since 2020. And nickel is used in stainless steel, in batteries, copper as well, used in electrical wiring, and it's now trading at about a 9-month low. And so when China is in this property crisis, it really takes away a big pillar of demand for these metals. And you add to that the dollar strength, which is really hurting manufacturers' ability to purchase these metals. So traders are now in a sort of wait-and-see approach as they determine the scope of more stimulus from China, as well as the impact of further trade tensions between U.S. and China. So we'll have to monitor this very closely, and the hope is that more policy stimulus will then feed into a recovery in the demand for these metals.
Bloomberg's China correspondent Min Min Lo there with the latest. And let's take a look at the view across other commodities. Oil at the moment, this is the picture. This, even as we saw sort of expectations of a second weekly advance for crude, we've seen stockpiles in the US taking a bit of a decline, and that is really kind of creating a little bit more upside for crude prices, which have been just so range bound over the past few months since about October. But Brent is seeing a little bit of upside. We're seeing New York traded crude also more or less just kind of trading flat at the moment. We had nationwide inventories for the United States dropping for a 6th straight week. Stockpiles also stay well below that 5-year seasonal average as well. So there are some indications that we've seen this kind of breakout from that narrow range. So the moves across both benchmarks now above the 100-day moving average, leading to perhaps some algorithmic buying as well, despite the uncertain outlook for the rest of the year. Also watching nat gas as well. Natural gas futures in the US rising, some cold weather at play there across much of the nation, and also European gas gaining as that outage in Norway adding to the pressures of the loss of Russian gas flows as well. More ahead on the Asia trade. This is Bloomberg. Well, social media giant Meta is replacing its president of global affairs, Clegg, with a long-time executive who has staunch Republican ties ahead of Donald Trump's return to the White House. For more, let's bring in Bloomberg senior executive editor for technology, Tom Zhao. So, Tom, obviously the timing of this shift makes sense, but tell us more about what we know about the new leadership here.
Sure. Joel Kaplan is someone who has very strongly established ties to the Republican Party. You'll remember that this is someone who was sitting in the background during the hearings for one of the more controversial recent Supreme Court justices that was nominated under Donald Trump. The backdrop here is Meta, formerly known as Facebook, really has taken several steps in recent months and years to redefine itself. It had been historically been considered a bastion of liberalism. The causes that Sheryl Sandberg, in particular, the former COO, was very much very close to and closely associated with the Democratic Party. In recent months, you've seen Meta take certain steps that suggest that they're trying to impair relations with the Republican Party, particularly Trump. Mark Zuckerberg, the CEO of Meta, having had dinner with Donald Trump at Mar-a-Lago. He had some words of praise for Donald Trump's response to his assassination attempt. And I think what you're seeing is, over the years, Meta has been criticized, one, for its ties to Democrats, but also doing things that, in the minds of conservatives, have undermined their ability to exercise free speech, and basically conduct themselves freely on the platform, up to and including Meta's decision to ban Donald Trump in the days after the insurrection attempt on the Congress in 2021, right as he was leaving office. They've basically let Trump back onto the platform. So it's really about establishing their Republican bona fides, but at the same time showing that, hey, we're equal opportunity. We're going to enable free speech on the platform, including views from the right, from conservatives. And putting Kaplan in this role, succeeding somebody who was much more associated with the Liberal Democrats in the UK, it really does send a signal that Meta, Facebook, its platforms are open for business for if you are a conservative, if you are a Trump supporter. It sends a very, very strong signal that Zuckerberg wants to have at least a constructive relationship with the Trump administration.
He did have dinner with Trump at Mar-a-Lago just over a month ago, right?
That's right.
What does this mean for the user experience if these changes are made?
Well, a couple things are important to bear in mind. It's really about sending a signal to users across the political spectrum that this is a place where you can express your views. If you have a view that is conservative, falls to the right of the political spectrum, you don't have to worry about being censored. At least that's the sense that one gets. What you have to watch out for is when you let users of any far sort of outside the mainstream political view, whether it's the left or the right, once that happens, does it become an unsafe place for people who don't agree with that particular viewpoint? For example, since Elon Musk purchased Twitter and renamed it X, it's become a place where the views of people on the far right have become much more accepted, and many people who don't have that particular political persuasion have felt that it's become unsafe, and a lot of them have left, and a lot of advertisers have left the platform. So Meta has to strike a balance here. Yes, it's fine if you tell people across the political spectrum, this is a safe place, we're not going to censor you, you can have views that are maybe outside the mainstream, but what kind of a space does that create for people who disagree? And so you have to strike a balance there. You don't want to alienate your advertisers, and you don't want to alienate other users. And Facebook is already, faces a challenge in terms of being relevant at a time when there's lots of other places where you can be engaged in interaction with your social network, whether that's on Instagram, which is also owned by Meta, or TikTok. And that raises a whole other set of questions, right? Because what Meta is definitely concerned about is what's going to happen to TikTok, owned by ByteDance right there in your backyard. There's a question that right now TikTok faces a ban, and Mark Zuckerberg knows that Trump has a soft spot for TikTok. He had previously tried to ban it, and now is encouraging the Supreme Court not to uphold the ban. So there's a lot of questions about Trump and his stance toward TikTok, and the closer, if you're Mark Zuckerberg, the closer you are to Trump, maybe the more you can get through the message that, hey, maybe you really should be concerned about national security with regard to TikTok, and and think of Facebook as a friend, an ally.
Could be a very different social media landscape throughout the course of this year. Bloomberg Senior Executive Editor for Technology, Tom Giles there. Let's take a very quick look at how FX is trading at the moment. One, of course, we're watching is the Korean won, as we see these ongoing developments with South Korean authorities moving to arrest the impeached president at his residence, but of course seeing that defiance from his lawyer saying that the warrant is illegal. They'll be taking legal action against that arrest attempt. Over 2,500 police officers deployed there to try and contain potential opposition from his supporters. We have seen, of course, so much weakness when it comes to the won, the lowest level since 2009. Let's bring Garfield Reynolds, who leads our Markets Live Asia coverage, for more when it comes to these markets. And, Korea, for much of last year, I think there were a lot of investors eyeing it with the hopes that perhaps it can replicate, at least in part, the success story that we saw finally in Japan. How much of these developments is really a setback as we continue to watch the chaos that's playing out?
Yeah, it's been a really tough outlook for people who bought into Korea, assuming that it was a stable place to go into, and that it offered some relative value, because over the last 6 to 12 months, Korea has substantially lagged behind Taiwan in catching on to the impacts of the AI boom. Now, Korea's technology companies are significantly further away from AI effects than some of the Taiwan companies, or one Taiwan company in particular, TSMC. But be that as it may, the potential was definitely there for technology boom, which has AI at its core, to lift Korea higher at some stage. And it was a bit of a head scratcher for many that Korea had lagged behind so much. Now, nobody at that stage was saying that they were avoiding Korea because of concerns about potential political problems. This was very much a black swan event for most. Even if you look at political commentators, they were shocked that things deteriorated this fast. And what's more, there's been more shock that it's been so difficult to get a resolution. So, given all that, Korea, in and of itself, faces difficulties. It also faces problems because it is tightly tied to China, and for that matter to Japan, and those are two markets that have also been stumbling for their own idiosyncratic reasons. So yeah, the Kospi looks more likely to break to fresh lows than to rebound from here.
That combination of political instability, growth, woes, is that what we're also seeing when it comes to the underperformance of the euro and sterling?
Well, I think that's, the politics there is definitely having an impact, but that's kind of more at the margin. I think it's just, good old solid, or as it you might say, not so solid economics is a big part of it. We had Lagarde over the new year highlighting her expectation that inflation is under control. That reiterates the potential that interest rates are going to come down there much faster than you're going to have in the US. You also have the concerns about a potential resolution or non-resolution for the Ukraine war. And then finally, you have the concerns that Europe is perhaps the most vulnerable amongst many economies to the impact of Trump tariffs. It hasn't been able to prepare as well. It's exposed both through the China channel and more directly. So all of those things, I think, have a lot more to do with the euro in particular being so weak than the simple concerns about politics there.
Garfield Reynolds, who leads our Markets Live Asia coverage. We have more ahead on the Asia trade. This is Bloomberg. Shares of Korean automakers have been lagging global peers, but the slide may have bottomed out amid weakness in the won. Our stocks reporter Yu Lee joins us now from Seoul. And I suppose, is there sort of some bright side as we continue to see the downward pressure on Korean assets with this ongoing political malaise?
Sure. So we've seen some of the weakness in the South Korean automakers during the second half of 2024, and that wasn't really because of their individual triggers, but more because of the broader concerns about Trump's second presidency, which could trigger the universal tariff and which could hurt their earnings. And also toward the end of the 2024, we've seen this broader political turmoil since the botched martial law decree that also weighed on the broader stock market. But now a lot of manager and analysts seem to believe that these Korean automakers are at the reasonable level of valuation. And when they look at the outlook for the broader Korean market outlook in 2025, the Korean automaker sectors appear to be more attractive than others. And that's partly because of the weak won that we've discussed earlier, which has been one of the weakest currency in emerging markets.
Where do we see the sort of most downside when it comes to the political situation? Of course, some of the impact that we see across households and consumers with this period of mourning as well, and the broader economic weakness. What stocks are you looking at?
So the biggest downside could be coming from the companies that rely on the domestic demand in the South Korean economy because of this latest mourning period since the disaster of the airplane crash, and also this weakness in the domestic economic growth could take a toll on the domestic consumption. So a lot of the investors are looking at that a lot of weakness in the domestic firms.
The market open in Seoul is next. This is Bloomberg. This is the Asia trade with Japan, and markets are still off this Friday, but South Korea beginning trading in a few seconds' time. And this, as we see, really just the escalating combination of downside pressures on South Korean assets, including the won, of course, dropping to the lowest level since 2009, highlighting concerns about a hit to growth with the really reiteration of slower growth expected, but also the limitations on the Bank of Korea to be able to cut rates to support the economy. This as the political crisis continues to escalate. South Korean authorities moving to arrest the impeached President Yoon, and of course coming up against some degree of opposition from Yoon's lawyer, saying that the arrest warrant is illegal and invalid, and that they'll be taking legal action against that arrest attempt as investigators have entered Yoon's residence in Seoul. You see that massive police presence there as well, 2,700 officers and then some being deployed near Yoon's residence. His supporters gathering there to try and block this unprecedented attempt to arrest a sitting president. And in fact, the execution of this would be the first such incident that we've seen, the arrest of a sitting president in South Korean history. The security service had previously said that security measures will take place in accordance with the law, but all of this coming, of course, as that December 3rd martial law declaration really catapulting the country into its worst constitutional crisis in decades. We're seeing that pressure when it comes to financial markets and his impeachment ultimately on December 14th. We're seeing the Kospi coming online there, just about 0.2% coming up at the open. We are watching for sort of some of the stocks that perhaps could benefit from the weakness that we see in the currency. Of course, a lot of the big exporters that are heavily weighted in this market could actually see a benefit. But of course, we know that adjacent to all of this is really the national grief that continues to play out when it comes to the devastating Jeju Airlines air crash just a few days ago, the period of mourning that's been put in place as well. And that is likely, if we see the sort of example being set by previous national accidents and tragedies, we'll see that impact on the economy, on household confidence, consumer spending and the like as well. Elsewhere, we're watching trading here in Australia. We're seeing a pretty muted session, about 0.1% higher. We did see a rise in some of the miners, but there seems to be sort of building concerns about what we can expect from the Chinese policymakers on being able to execute a swift turnaround for the economic weakness there. The Aussie dollar not doing too much at the moment, pretty much holding at 62 US cents. We saw sort of a brief rally when it comes to treasuries overnight, but a lot of those moves may have been boosted by kind of delay month and year-end flows. That early bid for treasuries really fading away as yields kind of taking a flip in the latter course of the session. Of course, US stocks didn't give much of a handover to Asia either, really looking like we're starting off the year risk off. South Korean anti-corruption investigators have moved to arrest the impeached president, Yoon after arriving at his residence early this morning. As you just saw there, thousands of police also deployed around the area. Yoon supporters gathering to try and block this attempt to arrest a sitting South Korean president. Our Chief North Asia correspondent Stephen Engel joins us now, and so much of what we continue to watch in this spectacle continues to be unprecedented. What do we know as the latest?
Well, the latest is that, as you've rightfully said, that the anti-corruption investigators have arrived at Yoon Suk-yeol's residence in central Seoul, and the agencies are saying that they have entered that residence. But at the same time, we're also getting reports from Yonhap news agency that a military unit has been placed basically in defense of President Yoon around the House. So there are obstacles for investigators, as well as the some 2,700 police officers who are also said to be there from actually arresting or executing on that arrest warrant that came from Seoul's Western District Court on Tuesday and will expire on Monday. So it's all kind of coming to a head today, perhaps over the weekend, before that arrest warrant expires. And of course, President Yoon has been defiant so far. He has failed 3 times for requests by the court to meet with investigators and the police, and so far is defiant, obviously. And his legal team is essentially saying that the moves to arrest him are illegal and invalid. In fact, the legal team yesterday warned any attempt for the anti-corruption investigation unit, which is there at the House now, to team up with those 2,700 police to physically arrest the president today or over the next couple of days is also beyond their legal scope. So this is, coming to a head right now, ahead of that arrest warrant expiring on Monday. But so far, we have got no reports that they have actually taken the president into custody yet.
And in fact, we're seeing sort of a few more details about this military unit appearing to be under the Capital Defense Command, currently standing in a standoff against South Korean investigators before the entrance point of President Yoon's residence. So, as we continue to see just this sheer level of instability and uncertainty, are we starting to see the impact when it comes to the economy? And certainly international observers and markets and, those looking at the currency would seem to be quite concerned.
Well, obviously, there are multiple threats facing South Korea and the South Korean economy, not to mention the mood is quite somber following that Jeju air crash earlier this week. And again, the threat of Trump tariffs globally also weighing on confidence. In fact, we had the finance ministry just yesterday revise lower its economic outlook, its growth forecast for 2025 to 1.8%, following 2.1% in 2024. Both this year's forecast and the actual result from last year were below the previous finance ministry forecasts in July. So there's definitely taking a hit. We've also heard from the Bank of Korea Governor Lee yesterday, essentially saying that they're going to remain flexible on potential future rate cuts. The BOK will meet later this month again, following two successive back-to-back rate cuts that we saw in the fourth quarter. That is something the Bank of Korea tends not to do, back-to-back interest rate cuts to support the economy. They'll cut and then review, hold, and then action. So again, we'll be watching that Bank of Korea meeting again later this month for any signs that the Bank of Korea sees on the stresses that are facing the South Korean economy from this political crisis, from the potential Trump tariffs, and just the overall downturn, of course, in global confidence.
Our Chief North Asia correspondent Stephen Angle there with the latest, and let's take a look at sort of the market implications of these developments that we're continuing to monitor in Korea. Let's get back to Seoul now with Yoon, who's the founder and CEO of Fibonacci Asset Management Global. Jung, really great to have you with us, and of course at a time where the developments on the ground in Seoul are coming in thick and fast. We know that there's quite a degree of uncertainty. We know that that's largely been expressed in the won. How do you kind of make of this in terms of South Korea's growth prospects and prospects for investing in South Korean assets?
I think the impact of the martial law and president being impeached is already fully priced in the market. We have already seen a large move in the FX and also correction in the KOSPI, the main board index. But we do not know for certainty whether President Yoon will be finally impeached or impeachment case will be overruled by the Supreme Court just yet. There are currently 8 judges to make the call, and if more than 2 judges overturn the case, then Yoon's power will be restored. The talk of the street is that it may be too soon to assume that there will be early presidential election in the spring. However, we maintain the view that the president will be impeached in the second quarter, and we will have a new president before the third quarter.
There was a great deal of optimism when it comes to South Korean markets, the value up propositions, and the hopes that, given that we finally saw that value being unlocked for Japan, that we could see something similar in South Korea. Do you think the political instability, the challenges to the economy now see significant hurdles to be able to achieve that potential?
Korea value up took a deadly blow after declaration of martial law. We think the opposition party will take control of both National Assembly and presidency this year, should there be an early presidential election. After election, if there is election, we think the change in legislation will add a meaningful vibe to the value program, as new laws and regulations will focus on how to protect the interests of minority shareholders and weaken the power of jabber families. There's also an interesting mix of political interest and legislation to support value up program, one which current opposition party can blend in more easily.
When it comes to the more external pressures, and we know that this is not expected to be a seamless year for externally exposed markets like South Korea and the economy, given the reliance on trade, what do you see as being the pressures there, particularly from an incoming Trump administration and the weakness out of China?
So the talk of tariff will now materialize into real trade barrier and therefore real substantial threat to Korean exporting companies. Since the U.S. dollar has gained a significant momentum after a U.S. presidential election last November, the net gain from export will be marginal at best from U.S. perspective. Will the Trump's policy save more American jobs or kill them is yet to be tested. Overall, Trump's comeback adds more uncertainties in both economic policies and geopolitical dynamics. We expect a bumpy ride in 2025, and we may also see some of the overvalued segment in the U.S. market correcting in the first half of this year, which can negatively impact the Korean market as well.
What about the broader sort of AI and chip trade? We've seen Samsung sort of lagging its peer Hynix on some fronts, particularly when it comes to high-value chips. Is that a space where you see continued momentum?
So 2024, the market paid close attention on the volume of HBM orders from NVIDIA and who gets it. But we now notice that others may become the next mega buyer of these high-value chips from South Korea. Samsung is still lagging behind its peer SK Hynix in this front. While we think the overall demand for AI and HBM to show robust growth this year, the dynamics of non-NVIDIA sales can be the major driver of stock price. The conventional memory demand has been disappointing in 2024. We think the mood is not great, it's lukewarm for that segment this year as well.
You say that there are some aspects of the US market that have been overvalued, and I think if you look at fundamentals and valuations, there's plenty of evidence to support that. But do you think there'll be a challenge when it comes to the sort of US stock exceptionalism story and, in fact, the US dollar story?
So I think it's easy to spot the US stocks relatively overvalued compared to Korean stocks not because of the US exceptionalism bit, but because Korean stocks are so cheap right now. And if you look at the consensus for growth in South Korea this year, it's very weak. Both export and consumptions are expected to show less vigor this year compared to last year. And the Bank of Korea is poised to cut more rates in the coming month, but the strength of dollar and Trump's inflationary policies will keep the strength of USD relatively strong. This is part of the reason why Korean stocks are very cheap right now. As a result, we do not see the interest rate differential between US and Korea will narrow because of the fundamentals of two economies. Instead, it could widen. And that's not good for Korea won. But once Trump administration starts this month, it may pressure South Korea by questioning whether South Korea is manipulating the foreign exchange in the interest of exporting companies. That might push the Korea won upward against USD.
Are there any opportunities in Korean markets while so much of the news flow is negative at the moment that you think might be bargains or sort of value added?
So there's been talk of ceasefire in Ukraine and de-escalation of geopolitical tension in the Middle East. And if you look at the defense stocks, it has come down a little bit. But I think after Trump gets elected, the geopolitical tension can only escalate, and we will see more volatility spike in the market coming in. So I think if you're already overweight in AI, maybe it's time to pay more attention to some of these defense stocks as a geopolitical hedge.
Jung and Yoon, who's the founder and CEO at Fibonacci Asset Management Global, do stay with us. We'll talk a little bit more about the Fed and sort of the outlook for monetary policy next. But you can also turn to your Bloomberg for more when it comes to the latest on the political situation in Seoul. You can get more at TLIV Go to get commentary and analysis from Bloomberg's team of expert editors. More ahead on the Asia trade. This is Bloomberg. Well, a new year means a new group of Fed officials getting a say in setting monetary policy in 2025. Austin Goolsbee, Susan Collins, Alberto Masalem and Jeff Schmidt all joining the FOMC voting bloc after expressing various views on rate cuts. Bloomberg Economics is expecting to see more dissent, noting that most of the new voters tilt hawkish. Meanwhile, Mary Daly, Raphael Bostic, Tom Barkin and Beth Hammack will no longer vote this year, but will still participate participate in policy deliberations at every meeting. Let's bring back Jung In Yoon, who's the founder and CEO at Fibonacci Asset Management Global. And, when it comes to expectations from the Fed, it's a great deal of uncertainty at the moment, right? And that's sort of even without the incoming Trump administration. What are your expectations in terms of how long a pause from the Fed might be if, in fact, we do see a lot of stimulatory and, fiscally additive moves from the new government?
But Trump's policies, especially the tariff, is inflationary in its very nature. So, and also, it actually benefits the U.S. budget. That means in the future, if there's more tariff being collected, there's less need to issue U.S. Treasury bonds. So we could have less Treasury bond supply. At the same time, inflation being very stagnant and refusing to come down. That means that we will have the current state of the mid-level interest rate for a prolonged period of time, much longer than many analysts expect. So that will keep the strength of US dollar very strong. And that means some of the tech stocks that showed a magnificent rally last year is now at the risk of devaluation or price correction. And naturally, companies like Samsung Electronics or SK Hynix and even TSMC, who's shown a very high correlation with these US tech stocks, can also go through some minor correction as well. So the questions people are asking is, okay, in that case, I still want to invest in AI rally. How do I formulate my strategy? I think investing in the backbone of AI rally, the infrastructure that supports AI rally, is a contingency plan. So we could be talking about anything that transmits the energy, like electric core, or hardware that's required to transmit or store energies, like batteries. And we can also talk about alternative energy source, like liquefied natural gas, because the demand for AI will only keep increasing, and demand for electricity will increase very sharply. By 2030, we'll be probably out of a good infrastructure to support the current AI structure. That means we need to build more generators. So these are areas that I will invest in.
Do you see those areas presenting opportunities in the Korean market in particular?
Yes, I think if you look at the first time when President Trump was elected, it was caught by surprise, and Korea won depreciated against US dollar sharply. But right after he came to office, Trump started to insist that some exporting countries, including South Korea, are manipulating foreign exchange rate to benefit its own companies. And after that, Korea won, staged a very significant rally through the course of the years. So we might see the same thing repeating in Trump 2.0. Since his re-election in November, won has depreciated about 10%. But what if he says, hey, companies like Samsung, SK Hynix, or even Kia and Hyundai Motors are benefiting too much because Korea won is artificially devalued. And adding this pressure will change the dynamics in the direction of the currency. We might see a sudden inflection point in the movement of FX rate that will strengthen Korea won, and that will ultimately benefit KOSPI and KOSDAQ as well. So foreigners noticing that will return to Korean market, which is already very cheap. This means that after Trump's re-election, we can have a mini surprise rally in KOSPI.
Jung In, really great to have you with us. Jung In Yoon, who's the founder and CEO at Fibonacci Asset Management Global. The latest from the corporate front, and Bloomberg's been told that Airbus delivered about 760 jets last year, falling short of its annual target of 770. Our sources say sales in December alone came close to 120, marking a turnaround after months of supply chain bottlenecks. The company is set to reveal its official orders and deliveries for 2024 on January 9th. Apple shares slipped after Reuters reported that the iPhone maker is offering discounted smartphones in China. The fourth consecutive decline marks Apple's longest losing streak since November. Reuters says the discounts will run from January 4th to 7th, knocking 500 yuan off the flagship iPhone 16 Pro and Pro Max. Morgan Stanley has terminated its membership in the Net Zero Banking Alliance. It's a global group intended to aid the reduction of greenhouse gas emissions. Citigroup and Bank of America quit the alliance earlier this week. The move comes amid an tense political backdrop with the US, with Republican campaigns characterizing net zero groups as climate cartels. More ahead on the Asia trade. This is Bloomberg. US investigators say they found no evidence linking deadly attacks in New Orleans and Las Vegas. The FBI continues to examine the two incidents that rattled Americans as they rang in 2025.
There's also an FBI investigation in Las Vegas. We are following up on all potential leads and not ruling everything out. However, at this point, there is no definitive link between the attack here in New Orleans and the one in Las Vegas.
Let's bring Bloomberg News Desk editor Jill Deeses there for the latest. And there were sort of some overlapping connections between the two men that gave rise to speculation that there might have been something, correlated between the two incidents.
Yes, that's right, Heidi. So it seems like, some of that, sort of supposition about maybe these two incidents were connected kind of comes down to some of those similarities. So first of all, both of these incidents happened really within hours of each other on New Year's Day. You did have that, very tragic incident in New Orleans where this truck ran into a group of people, killing 14, another including the driver who ultimately, was killed in an exchange of gunfire with police. But that in that incident, in both the Cybertruck incident, the cars were both rented from the same type of car rental company. They're both electric cars. They're also both of these suspects were Army veterans, which really does seem to be one of the bigger causal links. But again, what you have here now is we're getting another day out from this investigation. Is the FBI saying that they don't see any links between these two cases? On this one case in New Orleans, you do have a man who's had sort of purported ties to the Islamic State. There was an ISIS flag that was found at the scene. He had made some social media posts kind of emphasizing, some of his allegiances to the Islamic State, although it doesn't seem like there was any sort of coordinated attack on their behalf at this time. But then in this other case, you have a man where, again, motives are still kind of being, sort of explored there, but it did seem that suspect suffered from a self-inflicted gunshot wound in the car before that explosion went off. So again, you do have, while there's a couple of similarities here, authorities once again today are just emphasizing that they don't see sort of any correlation or any sort of coordinated attack by these two individuals.
To what extent do we see kind of the incoming Trump administration and President-elect Trump reacting to this?
Well, Heidi, what we did see was on Wednesday, before we really had a ton of identifying information about the suspect in the New Orleans case, you did have, of course, Donald Trump has expressed condolences to the victims, but he's also kind of used this as an opportunity to kind of hit on security.
Bloomberg News Desk editor Jill Deeses is there with the latest. More ahead on the Asia trade. This is Bloomberg. China plans to tighten export restrictions on certain technology used to make battery components and the processing of two crucial metals amid rising trade tensions. Our China correspondent Min Lo joins us now from Hong Kong. So Min, what do we know about the sort of how extensive these curbs are?
Yeah, so Chinese Commerce Ministry is now mulling curbs on battery cathode material preparation technology as well as some processes used to extract lithium and gallium. This comes about a month after China had announced it would ban certain types of critical material exports to the U.S. in retaliation for Biden administration's announcement of expansion of tech curbs to China. And there on the screen you can see that China is by far the top global supplier for many of these critical minerals, and while while it is possible to get them from other sources, it is likely going to be more expensive. But what we're going to see over the next few years, perhaps, is this reconfiguration of global supply chain, because when prices go up, it will likely incentivize other countries to also step up production. And right now, the Ministry of Commerce from China is seeking public opinions on this proposed rule until the end of the month, which means by the time China actually has a conclusion on what to do about that, Trump would already been in power. So any sort of retaliation or action taken by the U.S. will likely be left to the Trump administration.
You know, when it comes to the reaction in the new year from metals markets, there's clearly quite a bit of skepticism as to how this China turnaround will play out.
Yes, we are seeing the metals market really starting the year on the back foot, because you have nickel, for example, trading at its lowest level since 2020. Copper as well trading at about a 9-month low. And it's very tied to the China economic story, because China is the largest consumer of many of these metals. Nickel, for example, is used in stainless steel and battery. Copper is used in electrical wiring. So when Chinese consumers are not spending and the property sector is still in crisis, then it really takes away a big pillar of demand for these metals. So investors are really still in this wait-and-see approach to assess the scope of Chinese stimulus, as well as the impact of trade frictions when President Trump comes into power. So we'll have to monitor this very closely. The hope is that any stimulus from China will eventually be able to feed into more demand for these metals.
Bloomberg's China correspondent Min Lo there. Well, Tesla shares fell after annual vehicle sales dropped for the first time in over a decade. That was despite a year-end push that delivered a record fourth quarter. Bloomberg's global business Asia editor Peter Voko joins us for more. So, Peter, what does that tell us about the outlook for Tesla this year?
Yeah, good morning, Heidi. Well, I think it tells us the outlook for Tesla this year is still mixed. As recently as October, Tesla had guided for a slight increase in 2024 sales, which would have implied fourth quarter shipments of around 515,000, and instead that came in at 496. And so, you know, despite all this sort of enthusiasm we've seen for Tesla and Musk-related companies post the election of Donald Trump, given their increasingly close friendship, and then the big rally that we saw in Tesla shares after the election, it does show that there's real operational challenges out there. You know, Tesla has forecast growth of around 20 to 30% in sales this year, but we know that Trump wants to rein in EV incentives, the tax credits that Tesla cars qualify for. There's been an industry-wide slowdown in EV sales, and that sales forecast that Musk has made also relies in part on a more affordable car that is yet to be unveiled, and also advances in autonomous driving technology, you know, which Tesla is leading but is yet to fully master.
When it comes to the Cybertruck, it now qualifies for US tax credits. Is that sort of a significant development for Tesla?
Well, it depends partly, I think, how long those tax credits last. You know, Trump has made no secret of the fact that he wants to get rid of them. And even Musk supports the removal of these tax credits under Biden's Inflation Reduction Act. While he argues that while they benefit Tesla, they benefit his competitors more. I think also given, you know, the Cybertruck's a very particular vehicle that appeals to a very particular buyer. It's hard to know how much just having a tax credit there would boost sales of that.
We also have sort of most of the annual sales figures for the big Chinese automakers as well. BYD obviously was a standout, but what's sort of the broader outlook for the Chinese car market given the economic malaise broadly?
Yeah, well, I think very similar in that, you know, we saw a sort of a similar picture in this fourth quarter spurt as, you know, companies tried to reach their year-end figures. But going into what could be a really difficult year for Chinese car makers, we'll get the full impact of the European tariffs hitting this year. They were only introduced late last year, and that takes out or makes it very much harder for the Chinese EV makers to push into what is one of their big export growth markets. The Chinese Passenger Car Association has forecast 2% sales growth for this year overall, and that's down from 5.7 last year. So that's quite a slowdown in the rate of growth. I think that what that means is that we're just in for another year of really fierce competition in China. You know, there's been a relentless price war for the last 2 years, and we could see some of the smaller players there really struggle to survive, particularly given the rise of new entrants and the tech giants like Xiaomi and Huawei.
Bloomberg's Global Business Asia editor Peter Verco there from Sydney. Let's get to the latest back in South Korea, where shares of Korean automakers have been lagging global peers, but the slide may have bottomed amid weakness in the won. Our stocks reporter Yoon Lee joins us now from Seoul. So amidst all of the political chaos and, of course, the weakness in the won, there's got to be some upside, right, for Korean exporters?
That's right. So the weakness in the won so far hasn't really provided much boost to the South Korean exporter, but a lot of investors seem to believe that in 2025, some of these exporters, especially those with the operational improvements, such as the automakers, are primed for rebound sometime during the 2025. If you look at the South Korean automakers during the second half of last year, in 2024, they underperformed their rivals, and that was mainly because of the domestic political turmoil that has been weighing on the broader index, and also because of the fears that when Trump takes office, the universal tariff could hurt their earnings. However, it seems like the South Korean automakers are one of the few non-U.S. brands that have presence on the U.S. soil. They are increasingly producing cars on the U.S. In the U.S. plants. So the impact from the tariff could be less than their rivals in overseas. Also, the weakness in the South Korean won could provide tailwinds for these automakers, which compete with the Japanese rivals, whereas the Japanese rival has been seeing the strengthening in the yen. So the weakness in the won is another factor that is going to provide a tailwind for the South Korean automakers.
In today's session, at least, we're seeing kind of some bright spots when it comes to the won and South Korean equities as well. Is there a sense that, at least local investors are hoping that the political chaos will pass, even if foreign investors might need a bit more convincing?
That's right. So we're seeing some of the gains in the South Korean benchmark Kospi, and that comes after 5 sessions of losses. So there might be some dip buying, and also more investors are believing that the current political uncertainty has been priced in for the South Korean stock market because it has seen severe losses in 2024. What we see today is that we're seeing some of the buying from the foreign investors, which we haven't seen for a while, especially toward the latter half of 2024. So some of the dip buyers are also foreigner, not just the domestic institutional or retail investors. What we're also seeing is now we're seeing some of the rebound from the EV battery makers after the news that the U.S. is granting some tax credit to some of the cars made by the Hyundai Motor and Kia. So that's also providing tailwinds for these battery supply chain stocks that have been suffering from the severe losses in 2024. So that's why we're seeing some of the gains in today's session. We'll still have to see whether this means that the full-fledged recovery, that might still need more time because we still have this political uncertainties lingering, as can be seen in today's arrest over Yoon. But definitely the level of the Korean stocks look very cheap and attractive for a lot of investors.
And authorities have been trying so hard to restore confidence in financial markets there too. Right, our sports reporter in Seoul, Yoon Lee, there as we continue to watch the developments in Korea very closely. But let's take a look at how broad Asian markets are performing, because again, it was a pretty weak handover that we had from Wall Street, in particular the concern over the softness in Chinese equities as we get into this new year. That really passed through to the ADR session overnight there as well. But it does look at this point like we might actually buck the sour mood on Wall Street that dragged US stocks lower for a 5th day. We are seeing some green shoots. We were just talking to Yoon earlier about perhaps this recovery rally that might be taking place when it comes to South Korean risk assets. Of course, this could just be some dip buying there at play as well, but certainly over 1.5% stronger in the day's session. We're also seeing the Australian stocks up by 0.3%, reversing some of those earlier losses. New Zealand, though, coming back online for the new year with losses of about 0.7%. We're also seeing US equity futures edging a little bit higher there as well after both the S&P 500 and the Nasdaq 100 ended lower on Thursday. And a reminder, we do have equity markets closed still in Japan for the holiday. That sort of fall that we've seen in the US are really coming with the rally in the dollar as well. And we're watching for some of the sort of reaction across trading dollar pairs in Asia. More ahead on the Asia trade, this is Bloomberg. We continue to watch the latest developments out of South Korea. This is, of course, the move to arrest the sitting President Yoon is really facing some opposition there. The court issued that warrant after Yoon refused to cooperate or to show up after his brief imposition of martial law on December 3rd and his impeachment on December 14th. At the moment, we're hearing that a military unit has been blocking the anti-corruption investigators' entry into the Yoon residence. That South Korean investigators are in a standoff with a military unit before being able to enter President Yoon's residence in Seoul. That military unit appearing to be under the Capital Defense Command. And this, as we've also seen a statement from Yoon's lawyer saying that they'll be opposing the arrest as illegal. As you can see there, there's a huge police turnout there as well. According to Yonhap, around 2,700 police officers have been deployed to try and maintain order, assembling for Yoon's arrest. Many of Yoon's supporters, they're also turning out to seek to try and prevent the arrest and to protect him. Some brandishing "Stop the Steal" banners and American flags there as well. So we continue to watch those developments, which of course got started very early on Friday morning in Seoul. Joining us now is Jae Moon, who's an Underwood Distinguished Professor at Yonsei University's Department of Public Policy and Management. Great to have you with us. And you know, the developments that we see and the pictures that we see out of Seoul continue to be quite extraordinary. And you say a lot of people are really glued to their TV screens this Friday morning. What do you make of these latest developments, particularly when it comes to the resistance against being arrested?
Yeah, once the detention warrant was issued and corruption investigation agency tried to negotiate with the presidential safety security service. And now, of course, and as you mentioned this morning, they actually tried to execute the detention warrant. And now they passed the main gate. And now some of the crews actually in the residence, but I think they are blocked by the last military unit. I'm sure that they are still under negotiation, try to execute the warrant, and hopefully a lot of people want to get this down this morning. But I think it's under uncertainty.
A lot of uncertainty, particularly when it comes to the groups that might be supporting him. Where do you think public sentiment lies right now? Because there was a great deal of support, obviously, for his impeachment and for the opposition.
That's right. About 70% actually, people here support for the impeachment. But there's some small group of people still supporting Yoon, and they are outside and they are protesting. But I think that's pretty much very minor voices. Most of the majority of Korean people really try to terminate the uncertainty at this point and want to go back to the routine and normal stage. So this morning, I think, how corruption investigation agency actually execute the detention warrant this morning, and then they once it's done, and they have 48 hours whether or not they request for formal arrest warrant, and that's next step. Of course, the impeachment process will be, has been ongoing in the Constitutional Court.
There's a lot we don't know. We don't know if they've sort of actually successfully managed to enter the residence. We know that they were attempting to exercise the arrest warrant. We know that there are, members of the military that are kind of in this standoff at the moment. Do we know what would happen if he continues to resist this arrest? What are the sort of procedural factors at play here?
So I think the investigation, the corruption investigation agency, I'm sure that they had different scenarios. For example, whether they are really blocked at the gate, but that's been through already this morning, so that they're in the residence already. So that I think this is sort of a final resistance, and. On the one hand, they still try to negotiate with the presidential security service, So hopefully they really avoid any unexpected troubles between the two sides. And if there's some troubles between two sides, and then that might lead to another path. So that's the last scenario we want to have. So hopefully we go through that. But I think this is sort of a last phase in getting into the residence and then actually execute the detention warrant. And so at this point, we still don't know to what extent the resistance from the military unit, but it's seemingly a military unit being requested to the corruption investigation agency. So hopefully we go through this morning.
With the growing pressure on the acting president, Jae, he appointed those two justices. Does that meaningfully increase the likelihood that the impeachment will carry through?
Well, the Constitutional Court, the full memberships are 8 judges. So now we have 9 judges. So that now we have 8 judges. The opposition party, they really try to get 9 judges, so that we need one more. According to the Constitution, passing the impeachment confirmed, we should have 6 votes. So which means that now 8 judges in the Constitutional Court, if it splits 6 to 2, still impeachment can be confirmed. So that, and I think the case will be expedited, so that there are a lot of things going through, and a lot of people think that, well, probably it will take about just 2 months, whether confirm or turn down the impeachment case.
So if he is removed from office, we need to see a presidential election within 60 days. How do you see that being played out, and can we have sort of, a safe and guaranteed democratic process given all of the chaos that we've seen so far? What would be your expectations from the opposition party if they are successful?
So once it's confirmed, then, as you mentioned, that we have 60 days, and then next election will be taking place. So I think, once impeachment is confirmed, the Korean society, I believe there's a very strong resilience, particularly democratic resilience, so that I think the next presidential election will go through. Of course, there are several candidates, strong candidates from ruling governing party side and then opposition side, and seemingly the opposition side, the candidates are quite strong because of these current situations.
From an international perspective, everything that's transpired so far and the continued chaos that we are watching this morning, how damaging do you think longer term is it on the reputation of South Korea, its mode of governance, its ability to have diplomatic relationships with its allies?
The current situation actually put a lot of negative impacts on Korean society, politically, economically, and socially, of course, particularly democracy being dampened. But I think because of the resilience, we believe, hopefully we recover as soon as possible and try to find the order out of the chaos. We have been going through very different challenges before in the past, but the history tells the story that Korean society been pretty much resilient in many ways, so that once the political schedule is set up, and then probably the economic damages and social damages could be minimized, and then going back to the normal. And that's what a lot of people want to see and then really hope for.
I'm Jae Moon, Underwood Distinguished Professor at Yonsei University's Department of Public Policy and Management. Really appreciate your time with us this morning. And you can get much more on your Bloomberg for the latest situation and the breaking news out of Seoul. Go to TLIV Go. You can get that commentary and analysis from our Bloomberg team of expert editors who are reacting to those latest developments at the moment. Some of the other stories that we're following this hour, and the Biden administration is weighing rules that could limit or ban Chinese drones in the US over national security concerns. The Commerce Department is seeking comments with a March deadline that would leave any final decision to the incoming Trump administration. US lawmakers say two Chinese firms, DJI and Auto Robotics, control 90% of the global drone market. Terraform Labs co-founder Do Kwon has pleaded not guilty to US fraud charges tied to the $40 billion collapse of the Terra USD stablecoin. Kwon agreed to be held without bail on 9 counts, including wire, securities and commodities fraud. He was extradited to the US from Montenegro this week after his arrest there almost 2 years ago for travelling on a fake passport. More ahead here on the Asia Trade. This is Bloomberg. We are watching the latest developments out of Seoul as we see thousands of law enforcement officials assembled for the attempted arrest of President Yoon. There, we're now seeing and hearing reporting that Korean police are approaching nearby the Yoon residence building. This as we hear that a military unit is blocking the investigators in something of a standoff before entering the inside of President Yoon's residence. We'll be continuing to monitor these developments throughout the course of the day. This is Bloomberg.